Good afternoon, folks. This is Andy Pedraza with Special Effects Academy on the start of the week session for March 24th of 2019. Give me 1 second while I start sharing my screen and we'll get started. Okay, so again, welcome. Start of the week session for March 24th of 2019, and we'll get started as usual. Our normal agenda, a look at the prior week, our currency strength meter, fundamental announcements coming up, a look at the major pairs in the Forex market, any setups we see in progress or significant events, and a few words in conclusion. On the screen right now, the long-term ledger, I'm not going to dwell too much on it. It is down. We took some losses last week as we closed out trades that were moving in the opposite direction. We will be doing a bit of a rebalancing on the long-term account to reflect that, as well as put in a little bit of a different strategy going forward. And I'll explain that a bit later, but in essence, we've been heading into a very trendless, on the long term at any rate, very trendless period, which has the currency pairs moving in both directions without any consistency. And, well, we're going to be adjusting a little bit to that. On the short-term trades, we did have another positive week, not as good as the prior week. We're up about 2.4% for the week, captured 120.9 pips, and we did open 26 trades. Most of the profit did come out of the pound pairs as expected, given the volatility that has been coming into the UK, the British pound, as a result of all the Brexit back and forth, which shows no sign of abating. So officially, we still have the Brexit deadline coming up on Friday of this week. Unofficially, or I guess officially 1.5 or whatever you want to call it, the EU has accepted, or rather has offered, an extension until mid-April, contingent on some sort of plan being approved, of course, before they can extend it any further. So that cliff that was that the UK was barreling into, that was going to come due on Friday, well, the EU has granted them another 2 weeks to allow them to come up with some sort of plan before they can consider an extension of the Brexit deadline into May. So we seem to be going 2 weeks to 4 weeks at a time, just kicking the can a little bit further down the road. And, well, that's where we're at right now. So this week is probably not going to be the do or die week for the pound, as expected, because Brexit is now pretty much a given that Brexit is moved to the 12th of April as a final attempt from the EU to allow the UK's parliament to get their, to get their acting gear. But there is no gentler way of putting that. So that's what we're looking at. The pound is still going to be vulnerable to anything coming out of the news cycle, good or bad. So not necessarily this week is going to be a dud. It could still have fireworks, but again, not a given. We'll take it day by day. Notes and opportunities for improvement. Well, as I said, Brexit is still the big unknown, and volatility is going to be working, or has been working, on our side accordingly. We're going to continue applying the same approach, doing it cautiously and just trying to make sure we're positive at the end of every week. And that's all we can do. The market is still going to be doing whatever the market wants to do, and we're along for the ride. But our approach that we've taken on the pound pair seems to be working out well. So we'll continue that until further notice. As I mentioned, We did close some of the trades on the long-term account, taking a hit on that. Some of them did get closed at profit, but not enough. As the market is shifting, some of the pairs that were going underwater are now starting to come back and vice versa. So as I said, we'll be taking a closer look at that. And of course, we'll be rebalancing the whole thing at the end of the month, which is pretty much at the end of this week. The short-term account did close profitably for yet another week. And the cat pairs, for whatever reason, are still acting contrarian. And we'll take a look at that as well when we go into the charts. We did not carry any trades on the short-term account. We did not carry any trades into this week. So we went into the weekend all cash. Our relative strength meter for the past 30 days and the past week, volatility on the 30 days is down significantly. So we did have an outlier week that increased the monthly volatility. That outlier week has now gone off the radar as we have a rolling 30-day view of the volatility. So we're down more than 2 percentage points, or around 2 percentage points, back down to 4.23% on the monthly volatility. And for the week, it was a pretty normal week, 2.1%, but we did see those pound pairs moving in both directions. And of course, that's not accurately reflected since it does take the net volatility. It doesn't take into account that a currency pair may have moved up and down 2% at a time, 10 times during the week. It doesn't reflect that. It'll just take the net change week over week, and as such, volatility is still around the average of the 2% that we've come to expect. In the last week, we did see the Aussie gain some ground against the euro, the pound, and the CAD. And again, the CAD is very surprising, simply because the CAD should have gotten stronger. Yet nonetheless, if we look at the next column, the CAD was the overall loser for the week, despite the improvement in oil prices. The Swiss, a clear winner, gained ground against everybody except the yen, and we did take a chunk of profit off the table on our USD Swiss trade that had been on the books since February. The euro had a pretty poor week, gaining ground only against the pound and CAD. The pound lost ground against everybody except the CAD. The yen was the clear winner, so we've added the yen back into the radar because the yen is starting to make a significant move, very likely helped along by the fact that the Europeans do consider the yen to be their safe haven currency. So as uncertainty in Europe increases, the yen always tends to get stronger, and I think that's pretty much what we're seeing here. The Kiwi gained ground against everybody except the yen and the Swiss. The dollar was pretty middle of the pack. It lost ground to the yen, the Swiss, and the Kiwi, but it did gain ground against the Aussie, the euro, the pound, and the Canadian. And in the metals, it was a pretty good week with silver and gold outperforming everything except the yen. And that's where we are as we start out the new week. As you know, we don't do predictions here. We just try to trade whatever the market's giving. But I do think we'll probably need to keep a close eye on the pound. As I mentioned, even though nothing technically is planned for the week, we still have, it's still vulnerable to anything coming out of the news cycle for good or bad. And that may be those 100 to 200 pip moves that we all love and desire. Moving on to the fundamental announcements on the calendar for the week. It's a pretty small calendar, not a whole lot of stuff going on. We do have one interest rate decision coming out of the Reserve Bank of New Zealand on Tuesday evening. That will be coming out at 9 p.m. These times have been a little bit fluid in the last few months, so I will double check that a couple of times before then, just to make sure that it is 9 p.m. Eastern and we don't have any time zone issues affecting us there. But if it is at 9 p.m., then on Tuesday, we'll be having our 8 p.m. session about a half an hour late. We'll start it out at 8:30 so we can dovetail into the interest rate decision at 9 p.m. And that's pretty much all that's on the calendar for the week that's of any interest. You will see that on Thursday, it's still on the calendar that it's Brexit Day. It's the UK leaves the EU. Even though it's still on the calendar, that's not going to happen. Again, the new deadline is April 12th, unless again something changes, and then Brexit has been the thing that always changes. The only thing you can count on these days is that whatever you thought was going to happen with Brexit is probably not what's going to happen. It'll be something else. But anyway, other than that, we have the GDP out of the U.S. I normally don't trade these. Sometimes they are good movers, but for the most, it just isn't. It just doesn't do anything for us. So I pretty much skip them. Same with the CPI coming out of the Eurozone. Every now and then, once in a blue moon, the CPI is so far out of whack that that the euro makes a significant move, but it's really rare and definitely not worth it showing up every month for the CPI when only 1 out of every 10 maybe is a decent move. So I'll be skipping that one as well. So on the calendar, the RBNZ interest rate decision. And of course, while it's not technically on the calendar, we will be paying attention to Brexit throughout the week, and that will be guiding a lot of our trading. But there will be no specific session for Brexit unless we have some deliberation or vote in the House of Commons, in which case that usually tends to be a good thing to trade. But for now, none are in the calendar. Looks to be a week of deliberations behind closed doors while Theresa May figures out what her new plan is going to be and how and when she's going to present that to the House of Commons. With that, we're going to move into our commodities, our charts, with the oil chart in particular. So we had another nice bullish week for oil, which again, as I said, should have made the CAD get significantly stronger, yet didn't. So at some point there will be of necessity a correction unless we see oil retreating and heading back towards the bottom. That last candle that you see there is Fridays. That's pretty normal that Fridays is a reversal day. So I wouldn't pay too much attention to that unless, of course, the week starts negative and we see Monday, Tuesday, Wednesday, we see it breaking out towards the Ichimoku cloud there below it. But for now, I consider that retracement on Friday just absolutely normal. And we'll see if we continue heading up and making new highs Monday and Tuesday, then we're definitely still in a bullish pattern for oil price. And again, my short-term target, I guess, is around the mid-60s, where that next level of support resistance is shown on the screen. So we'll see what happens with that. But at some point, the Canadian does need to react to this, and we'll probably see a bullish move out of the CAD. But again, it'll be on whatever timetable it considers adequate, not on mine. And with that, we're going to move into the currency charts. We see that the euro did lose ground against the dollar the last couple of days in the week. So this was more than a Friday retracement. This was the euro showing a little bit of strain based on stuff that's happening in Europe itself, as well as the fallout from Brexit. It's not so much that Brexit is going to be necessarily bad or good for anyone. It's the uncertainty. Markets hate uncertainty. So the more uncertainty you have, the more things are going to be bouncing around. But suffice it to say that the bullish move that the euro dollar had been in for the past couple of weeks, if not 3 weeks, has broken. And I'll be taking a close look and see what it does in these first 24 hours of the trading week to see if we need to get back into our euro dollar or indeed our euro trades in general. Pound dollar, not much to say here. It obviously it went in all directions last week, and you can see that we have our red and blue arrows of every trade we opened and closed. It's almost solid. You can't see the candles because of the arrows. We traded the pound pair so much, and this was one that we took quite a nice chunk of profit out of over the last couple of weeks. So we'll see what this week brings. I wouldn't read too much into the charts. Or the charts rather on the pound pairs, because the technicals are not what's driving the price action here. It's all fundamentals. So keep an eye on your fundamentals, your news cycle, whatever Brexit seems to be doing any given day, and that will be your best analysis for the pound. Of course, we will continue trading the pound pairs by setting our traps, buy and sell orders above and below current price, and just wait for those to be triggered. Then take as much profit as we can out of any of the bigger moves and get out quickly with it and be happy. So we'll continue doing that with all the pound pairs. USDJY, as I mentioned, looking at the volatility, the strength charts on the yen. The yen did get stronger last week significantly, so it broke the trend line it'd been following and broke the trend line below it. We'll be taking, and we did take some profit actually trading this one up and then down. So we went in both directions and took profit out of it. You can see that we got out on the first retracement, and then it went lower, so we could have taken a bit more profit. But again, you can never time these. You can never get in at the low and get out at the high. It's just impossible. So we try to grab the middle of any movement. That's where we get our profit. But for now, I'll be looking at how the yen starts out the week and see if we want to get in and try to write it down for about 200 pips to that next level of support around the 108. So more to come on that. That'll depend on what it does as the week kicks off. But definitely the yen pairs are now on my radar for a bigger move, which is what we're always looking for. USD CAD, as mentioned, it applies to pretty much all the CAD pairs. Despite that, it should have been going down towards that trend line, the lower trend line heading up. It should have at some point even broken that trend line, yet it's going in the opposite direction. So the oil improvement in price has really not affected the CAD pairs significantly. We're still waiting for that bigger move, that correction, and we took some profit out of the USD CAD. We got out and it started heading in the opposite direction, so all went well there. I'm still looking to trade it down, and we'll probably pick an approach similar to what we're doing with the pound, and that is to set a trigger entry below, significantly below the price. So as we start seeing that big correction, we get dragged into it. But if it doesn't start moving in our favor, then I guess we're gonna ride it out. I do think we've got one USD CAD trade open right now, which is well, it's less than 100 pips negative, but it is negative. But I will be looking to increase that position if and when this one starts going down. So also on the radar, but we won't be trading it to any significant degree until we see that big move begin. I wouldn't be trading it up either. There's no reason for this to be heading up, except that it is heading up. But again, we'll be waiting for the market to react in the direction that everything would indicate. And in the meantime, we shall leave it alone. USD Swiss, it finally broke towards the bottom, then started to retrace, and it started to retrace heavy. It went much higher than where it ended the week. We did get out with a chunk of profit on a trade that we had held since February, so we're out of that one. But I'll be doing much the same as with the other ones. I'll be setting up an entry below the most recent low to try to get in the same direction. So I still want to short this pair, but I wanted to start making a significant move before we jump in again. Aussie dollar, not too much to see here. It's a pretty flat chart. It's going sideways. It's consolidating, and it's sort of what I was hinting at in the first slides in the presentation. The market's been going sideways on quite a number of pairs, and definitely not conducive to any long-term trading. We have been trading this one in the short term with mixed results, and we'll probably continue doing that. But for a short-term move, we're waiting for it to break in either direction. Kiwi dollar is heading up, so it has broken away from the bottom. but it is at the same time very sideways since around November of last year. It's done some wild swinging. It's gotten into a wedge pattern where it's between two trend lines, one going down, one going up. It does seem to be breaking out towards the top, but not decisively. I would go long on this pair if it breaks that level of resistance around the 69.70. I would also go short if it starts breaking towards the bottom of the Ichimoku cloud. So I'm agnostic on this one, and we'll wait for price to see what we do. Moving on to our Aussie CAD, same thing. This one should have been going all the way to the bottom by now on oil price improvement, and it hasn't, which is, well, disappointing for one, but also a little bit inexplicable. So much like the others, we will set an entry around the level of support right below it, around the 93.80. We'll put in an entry on this one. Again, attempting to write it down at least 300 to 400 pips, depending how far it goes. But it is moving contrarian. It's not doing what it's supposed to be doing. So for now, we'll leave it alone. Euro Swiss finally broke towards the bottom, especially Friday. The euro did weaken significantly on Friday, probably the worst day of the week for the euro. And this one went all the way down to its prior level of support. We did take a chunk of those pips. We probably should have stayed in longer on this trade, but it did start retracing, and we've gotten a little bit overcautious on some of these moves in a sideways market. And we can see that this market is sideways, despite the big moves that have been made on occasion. It is trapped between, I'm going to say, a 250 pip range sideways around the 114.25 and the 112.20. So really 200 pips. It's got a range of 200 pips. It's at the bottom of that range right now. If it does start breaking further down, I'll probably short it again. But this one has, well, it's resisted breaking out of that sideways channel for quite a while. So I'm not too convinced that this time is when it's going to happen. Euro pound, another one that we're not going to dwell on the technicals here because it is 100% driven by the fundamentals. It is at a bottom level of support right now, but again, that means nothing. It could as easily break another 300 pips down or go up all the way to the prior level of resistance at the top around the 0.91. Nothing in the chart is going to tell you anything at all. Not going to give you any guidance at all. It's all going to depend on the Brexit news cycle. Euro JPY, again, the euro weakened and the yen strengthened, so we finally had a decent candle come out on Friday. It's still not where I want to see it in order to start shorting it, but it's getting very close. I did say that if it broke out of the Ichimoku cloud towards the bottom, I would become a seller. And now, at last, it's back inside the cloud, but it still hasn't quite broken out. And this one has a nasty habit of doing this and then popping all the way back up towards that trend line that we see rising into the channel. So jury is still out on this one, but definitely this one, along with all the other yen pairs, have now piqued my interest, and I'll be keeping a close eye on them. Euro Canadian, yet again, another one that should be heading towards the bottom, yet isn't. And this one's especially puzzling because the euro weakened on Friday, yet it didn't on this pair. So it pretty much stayed flat. It looks like both the euro and the CAD weakened about the same. And while it did go down on Friday's candle, it didn't go down a whole lot. Maybe, you know, pushing it, it went down maybe 20 pips. It did have a big move earlier in the day. We can see that long wick that almost hits that trend line, but it quickly recovered and went back almost where it had opened. So again, I'm looking for a nice move out of the CAD pairs, and this is one of the key ones. But I'm not going to be entering that in bulk as I usually do. Start trading higher lot sizes until I see the move happening. We are in a EuroCAD trade, so we are short on this one, and we're waiting for that move, but we're doing it in very small lot sizes right now, even though they are long-term trades, very small lot sizes till we see a movement really picking up speed, and then we'll increase the positions. Pound JPY, again, not going to look too much into this one. It's been good to us. You can see all those arrows here of the trades that have been placed in the past couple of weeks. Almost all of them were winners. Friday was another day when this one moved towards the bottom. It still hasn't broken the support at the 144.85, which again, simply every time we see bad news come out of the UK, after a few hours, something good happens, or the bad news trickles out, or whatever. And this one should have already gone back into that dropping channel you see in red there, going down towards the bottom, yet it has resisted breaking down below the 144.85. We'll see what this week brings us. Again, this week might be a dud, but then again, it might not be. We'll be applying the same methodology as we have the past couple of weeks, just putting entry orders both below and above price action for the pound pairs. This would be one of them, and see what it gives us. Aussie JPY, again, JPY strength on Friday, giving us that nice deep candle that went into the cloud, but is still right at that level of support around the 77.85. So while it was a big move, a decent move, one we hadn't seen in quite a while, it's still not enough to make me a seller. And I really desperately want to be a seller of the Aussie JPY, but it needs to give me a valid reason, and so far it hasn't. We can see how trapped it's been in that sideways channel of about 130, 140 pips up and down, and really not moving away from the bottom of its channel. Euro New Zealand, this was our hero of the year until it got replaced by the pound pairs in the last couple of weeks. We did take a truckload of profit out of the Euro New Zealand, and then it started bouncing too much, and we put it on pause. I guess what I'm waiting for now, we do have a pending order. So if it does rise towards the top of the Ichimoku cloud and touches that, I will sell. I want to sell at a higher price than where it is right now. But at the same time, if it breaks below the 163.25, which is that bottom level of support, I will start selling as well. So I just wanted to break out of that sideways action it's been in for maybe a couple of months. So it's just been too sideways the last couple of months. I wanted to resume its the speed at which it was dropping prior to that. So also on my radar, as are all the euro pairs, but I'm in no rush. I'll wait for this one to give me the proper entries. Pound CAD, yet another one, should be at the bottom of its channel, yet it's still at the top because the CAD has refused to react to improving oil prices. So another one that will put our traps there to either buy or sell depending where it goes, but I'll be giving it a pause on the directional trading for a bit, as I may indeed for most of the long-term trading. We will get those directional trades again, simply when the market starts doing that. But for now, we may be more focused on the short term than on the long term until we see a decent movement start out. And last but not least, our pound Swiss, yet another one that is not giving us much to see on the technical because it's trapped in the fundamental cycle. So yet another one that is going to be played via traps, both buy and sell depending which way it goes, provided it moves enough. And of course, whatever happens will be driven by the news cycle, not by the technicals. The technicals will come back, but we need all this Brexit stuff to end, and we don't really want it to end too soon. It's been good to us. But if we want a big directional trade, one of those that gives us 1,000 pips, we do need Brexit to go away so these pairs can pick a direction and start moving. And that is the end of our charts for the week. The setups I see in progress, the Swiss pairs, and much like the yen, the Swiss is also a safe haven currency. So despite it being in the doldrums for quite a few months, it looks like global events may be positioning themselves yet again to give the Swiss franc a boost. Euro pairs, the euro, of course, is vulnerable right now to Brexit, as well as issues going on in the EU itself, which is why we've seen so much uncertainty out of the euro. It goes in both directions. So also not the best thing to be trading right now, and we'll see if we can get a signal, a valid signal out of the euro pairs, but I'm not holding my breath. The pound, of course, nobody knows where Brexit is going or even when it's going, and we expect a continued volatility and roller coaster behavior. The good thing is we've got a pretty good method to trade that, so we'll be trading it in whichever direction it moves, not looking for those big 500 to 600 pip moves over time, but looking to clear anywhere between 50 and 200 pips in a given trade very quickly in a few hours and get out while the getting's good. The yen pairs, the yen, as I said, is coming back to the fore as European events make people turn to the yen as a safe haven. We'll see if there's any strength to that movement. It ended the week very nicely. We had some nice yen strength towards the end of the week. I want to see another week of yen strength before I'll buy into the idea that the yen is starting to move. We'll start trading it cautiously, and then add to that also as time goes on if it does continue in that direction. And last but not least, the CAD pairs, despite the oil price rise, which I've mentioned heavily already, these pairs are being very contrarian, and we've got to trade them cautiously until a correction happens. A correction will happen. It always does. The question is when and if we're going to be around and ready to take advantage of it. So we'll figure out what the best way of trading these CAD pairs is to expose ourselves to a significant profit when the correction happens, but not expose ourselves to any loss if it continues either being contrarian or just moving sideways. Long-term review, as I mentioned earlier, we're going to be continuing to focus on the opportunities, and these are really short-term, that the pound pairs are giving us, as well as some of the other pairs. So the big focus, I guess is what I'm trying to say, is going to be more on the short-term for the next at least couple of weeks while things simmer down. At the same time, we're going to be taking a look at our long-term approach now that we're no longer in a trending or directional market, and we'll be rebalancing that account as well. But really, we need to figure out how we're going to trade that one, even if we're going to trade that account during what is essentially a trendless period for the most. And yes, that could end tomorrow. It might, start moving in whichever direction, but it also might not. So we got to trade whatever the market is giving us at any given time and adapt to that. And of course, we'll be releasing further announcements once we make any decision in that regard. And that is going to be it for this start of the week session. Does anybody have any comments or questions before we call it a day? Okay, then in that case, thank you very much. That is going to be then a wrap, and I will send a summary out of this session very shortly. And I'll see you guys tomorrow at the 8 p.m. session. Thank you so much.